Hello and welcome to Livewire's Buy, Hold, Sell. My name is Chris Conway. Momentum in small caps is heating up, and today we're shining a light on some of the stocks leading the charge, as well as a couple more that might be on the rise. To help me do that, I'm joined by Shaun Weick from Wilson Asset Management and James Nguyen from Tyndall Asset Management. Gents, before we get into the stocks, I just wanted to ask, when you're scanning the small cap universe, what factors are you most focused on? Shaun, I'll come to you first.
Yeah, for us, it's a lot of shoe leather, actually, and a lot of Zoom calls. So we often find that our best idea generation comes from actually meeting with the companies. Our process is very much focused on, identifying undervalued growth companies where, we can see a catalyst to re-rate the share price, whether that be, earnings upgrades, changes in management, divestments, M&A activity. So we're out there sort of daily just trying to scan and find ideas that way. And then ultimately, we think they're the factors that are going to drive re-ratings. We do have a strong focus on management teams. We think it is extremely important, particularly in the smaller end of the market. So, you can often follow the money and end up with good results.
James, what about you? Factors that you look for?
We look for similar factors, but I'd say the first and foremost front of mind is valuation. So first thing we look at is we're trying to understand businesses where the market has mispriced the current cash flow as well as future cash flow. And then after that, we're looking at the quality of the management, quality of the business model, and the quality of the balance sheet. One thing we probably don't look at, that I know a lot of participants in the market look at, is earnings momentum. And our view is that I'm happy to buy negative earnings momentum as long as I think the market has mispriced the trajectory of that earnings momentum.
We'll get into some of the stocks now. We'll put the theory into practice. First up, Generation Development Group, GDG, financial services business providing life insurance and life investment products, has had a ripping run. James, buy, hold, or sell for you?
Probably be a bit controversial here, and it's a hard hold or a soft sell, is my view. It's a business we love, right? And we love the business model. We love what they've done. We love what Grant has done. The execution has been nearly flawless. And we've owned it from mid-dollar and recently sold a couple of weeks ago at a bit over $7. Our view was that as well as they're executing, it's probably priced for perfection to a degree. It's trading on close to 70 times earnings. It's now trading on parity with a hub and a 20% premium to Netwealth. And my simple view is that the Netwealths and hubs of the world, where they are on the value chain from a tech stack perspective, they're probably a better quality business than the managed services account side of Generation Development. So, investment is an opportunity cost game. And so at the moment, we put our capital in Netwealth rather than Generation.
Fair enough. Shaun, up 106% in the last 12 months, so it has ripped pretty hard. Are you seeing any value there still? Buy, hold, or sell?
Yeah, don't let that scare you. We've been there since 60 cents. So we're still a buy. We rate Grant Hackett management extremely highly there. The business has great leverage to what are effectively strong structural tailwinds across both their investment bonds and also their managed accounts business through Evidentia. The market was getting a little bit concerned around delays in the awarding of a large mandate within the Evidentia business. But the feedback that we're getting across the industry suggests that that's likely to land soon. And, the delay is really driven by the fact that it's been upsized, the size of the mandate, which is actually a positive. So, the recent quarterly update demonstrated there's still really strong momentum in terms of flows. And then we just think the market's missing the opportunity within annuities. Super funds, this is an early stage area that they're looking at, but we think they're close to signing their first super fund, which will effectively turn a low single-digit million loss into at least break even. And super funds tend to be those kind of beasts that once one fall, the rest follow. So, we think there's some incremental earnings momentum to come through from there, which should place the business well from here and drive some earnings upgrades.
Next up, we're going to talk COG Financial, specialising in asset finance, broking, commercial leases, etc. Shaun, I'll stay with you. Buy, hold, or sell?
Yeah, this one's a buy for us, and it's a follow management story. Effectively, the guys from PSC Insurance that took that business effectively from 2015 at $1 to, the equivalent of $8 to last year when they divested the business to Ardno. So, they've come into this business, joined the board. We think there's really strong opportunities for this business to continue to grow its earnings at high single digit to low double digit, and then just continue to layer in acquisitions within that fleet management space where there's still a long tail of the market to be consolidated. Stocks on 13.5 times earnings, growing above, market. We think it looks really good here.
COG Financial up 131%, so better even than GDG, which we were just speaking about. James, seeing any value there still? Buy, hold, or sell?
Absolutely a buy. I share a lot of Shaun's comments. and agree with a lot of his comments. And I'd just say that, the time that Tony's been in the seat at COG, the speed that they're executing their strategy has been phenomenal. So they've already made a couple of highly accretive acquisitions. The market's only now beginning to reward them for that. So absolutely buy.
There you go, double buy, ladies and gentlemen, for those playing at home. All right, finally in the space, we're going to talk about another financial services business. You'd think that small caps were only made up of financials, but it's Netwealth. So we'll round it out for this segment. Platform business for managing investments, superannuation, etc. James, I'll stay with you. Buy, hold or sell?
A very recent buy for us.
Okay.
So we bought it post the First Guardian issues. If I look at the business itself, it's exposed to the structural growth within platforms and the movement away from aligned bank platforms into independent platforms. But the opportunity really arose because of the First Guardian. So those that don't follow the story, they're the platform provider for a managed scheme that has fallen over. We've seen the ramifications with Macquarie paying out investors. So our view is, though, if you look at the share price of Netwealth, it's down 20% since that time, while its closest comparable is Hub, which is up 5%. So what we've seen is about $1.5 billion of market cap has been destroyed for ultimately, worst case scenario, $100 million exposure. So they've got the balance sheet to handle that. That's less than a year's worth of after-tax profits. And so it's a business that can more than handle, I think, a worst case scenario. As well, if you look at Macquarie's reaction to its exposure, Macquarie's increased the, very blunt instrument, but they've increased the FUM of the managers that they will put on their platform. And what that means is that they've squeezed out a lot of high quality managers, they've annoyed a lot of financial advisors, and who's going to be the beneficiary of that? It's going to be Netwealth and Hub. So my view is over time, once they move beyond First Guardian and manage that the discount between a Netwealth and Hub will close.
Shaun, up 9% over the last year, so hasn't been as scintillating as the other two. Buy, hold or sell for you?
Yeah, it's a hold for us. We're just purely on a relative basis. We own Hub, and the business, it's a fantastic business, Netwealth. Management are excellent. They've done a great job in terms of capitalising on those tailwinds. But we do think the First Guardian Shield estimates are a bit of an overhang. There are some potential risk around what that means from a flow perspective in the near term. We think Hub, we think, is just maintaining very strong flow momentum. And we've actually got some AMP as well, which we think is a beneficiary of this trend too. So it's a hold for us on a relative basis.
We'll move out of the financial space. I've asked the gents to bring along a company that they think can do very well over the next 12 to 24 months, a bright future ahead basically, provided they can execute. So Shaun, I'll stay with you. What have you got for us?
Yeah, so my stock here is Atria. This is effectively a software as a service product that specialises in providing AI, which is used to scan the heart and identify and detect coronary artery issues effectively. And they've recently received FDA approval for their plaque scanning product, and they're on track to receive FDA approval for their flow scanning product in 1Q calendar year 26. They've got really strong validation in the field already. 3 of the top 10 hospital systems in the US have signed up for the Sapphire study. We believe there's a strong pipeline, sitting behind that the course of the rest of this calendar year that will sign up. And, in effect, we believe this is the next Pro Medicus of MedTech here in Australia. The upside potential here is significant. The TAM's about $5 billion. The market cap today is $500 million. And its closest competitor, which has an inferior product in the US called HeartFlow, is a US $3 billion company. So we think if this company can successfully execute over the next 12 to 24 months, this could be a 5x plus type story. So we really like this one.
I must say, when you were talking about getting into the US hospitals, I immediately thought Pro Medicus. Once you get a few of them, then the dominoes fall and they all adopt it.
The gold plate, yeah.
Good stuff. James, what about you? What's one that you think is on the rise?
So Shaun had me at Pro Medicus. So the one that I'm really excited about, it's actually the smallest market cap company in our portfolio, is a company called SciDev. So SciDev, its core business is providing IP in terms of water treatment for heavy industries, so that they leave a lower environmental footprint. So its major product is a product called CatCheck, which is basically chemicals for the US shale industry. And so what it does is that it reduces the friction when you're extracting shale oil. And what that means is that you extract oil more efficiently, but it also extends the life of the well. They've been able to, last year, deliver 40% revenue growth in an environment where shale oil has been flat. So they've been able to take material market share. What excites me is the fact that they're 8% of market share in the Eagle Ford area, or the Eagle Ford Basin. And they're only just entering the much larger Permian Basin where they're only 1%. So the runway for growth there is immense. But that's not actually the reason why I get excited about SciDev. The reason why I get excited about SciDev is they've got a business that treats PFAS. So for people who don't know what PFAS is, PFAS is a forever chemical that's really infiltrated a lot of the soil, a lot of the drinking water that we have. We've seen the harms of PFAS and the ramifications where 3M has settled with a lot of the drinking water utilities in the US for over $10 billion. This is a market that estimates are it'll be 300 to 400 billion just to remediate PFAS in the US, let alone in Europe. This company, little company in Australia, 80 million market cap, has the best technology to address the PFAS issue. So in Australia, they've treated 2 billion litres of drinking water. In the US, they've only just won their first contract to treat 3 contaminated defence sites. And if they can prove that their technology works, my view is that there's a massive runway for them. At the moment, you're paying 6 times EBITDA for their core business. But if they can execute on the PFAS, I genuinely believe this is a 10-bagger.
There you go. A couple of very exciting picks, ladies and gentlemen. Just quietly, I think I'm going to add them to my watch list as well. If you enjoyed this episode, make sure to give it a like and don't forget to follow our YouTube channel. We're adding lots of great content every single week.